and $950 and $900. Some of these people are calling for $650 and $700 gold. They must be out of their minds. But they're trying to attract attention. And the reason they're trying to do that with the newsletter writers is they've lost 70% of their subscribers in the last 2 years. Newsletters are in a depression. The international forecaster has doubled. And as far as economists and analysts are concerned, their companies tell them what to do. And whether they like it or not, they're going to be anti-gold. It's as simple as that.
What's sad,
so don't
Bob,
listen to them unless you want to lose your money.
What's sad, Bob, is I've had customers that sold their gold based on those predictions, thinking that they'd be able to buy in at lower prices.
Well, and they listen to me all the time. So all I can tell them out there, you're morons, and you deserve to lose your money, because we've been right and they've all been wrong. What could you conceivably be thinking of?
I know.
Idiots.
Charles is also in his mid-50s and not having accumulated enough for retirement. Do you agree with the investment advice of don't invest what you can't afford to lose? He's concerned about losing what he's accumulated and don't really know how to approach speculating in gold with retirement money that he can't afford to lose.
You're going to lose it anyway, through inflation, through taxes, maybe confiscation. They might roll your retirement into Social Security. We don't know. It's a guess. Attempt is made to do so, but nothing's come of it so far. I mean, you've got to be out of it to stay in the stock market or the bond market, both of which are at peaks here. I mean, there's no choice. If you want coins, you go to Melody. It's as simple as that.
And let's see. I guess we had a little bit of a problem with the signal on the internet. I guess we're still being broadcast on shortwave. Let's see. Let's go to the sex, so they'll get that fixed and check the archives out. It'll probably be replayed on the archives. Damon Vickers stated that gold will go to 2,000 to 4,000, but avoided to say the timeline. Vickers also stated that dollar will continue to slide. He also voiced a sentiment for one world government. Is he close to Rockefeller?
I don't know who he is, so I can't comment. But I'll tell you right now what they're doing is they're shorting the big gold stocks. They're long bullion, gold bullion, and they're waiting for this rise to complete itself, this rally. They'll sell their bullion, and then they'll try to let their shorts run for a while, but then they got to cover them. And I know that they're doing this. I know the government's involved, the hedge funds, and then I got loudmouth illuminists, Jimmy Rogers, telling people to buy gold bullion, but not the shares for some innocuous reason. And of course what he's doing is he's helping his buddies, the illuminists. Don't forget he was George Soros' partner for years. This is the kind of thing you're going to look for. They call it psychopolitical financial warfare. And I don't know how many times I've come out with stuff like this on this program, and I've been dead right. And named a whole bunch of crooks in the process. In fact, one of them's under indictment right now.
You kind of touched on this in the beginning of the program, Bob, and I'm going to go ahead and Mark sent us a question, so I'm going to go ahead and if you had to pick a number, where it would be possible for the Dow to go above, what would it be? You thought 9,000 would be too much, and here we are knocking on the door of 10.5.
Well, it's pretty obvious it'd be 14,268 or whatever the number was.
Mm-hmm.
And they might try to do that. I mean, you can't rule anything out because the market's crazy as it is. It's madness.
He also stated that will there be negative pressure on silver once the market heads back to 5? He doesn't know if it's a coincidence, but he's seen the past couple of months, with a few exceptions, when the stock market was down on the day, so were the metals. And he wants to know if they will break that pattern or correct with the market back down to 5.
I don't think there's any correlation between the market and the price of gold or coins or shares. To me, it's never been that way. And the only time in history since 1960 that gold couldn't at the time, but gold shares went down when the market was down were September and October of 1969. The market broke big time, and it took the gold shares down with it. But they didn't go too far. They went down about 25%, turned around and went right back up again about 4 months later. But that's the only time I've ever seen them do that. But you got to remember, there's all kinds of stuff going on in the market that never went on before. We didn't have derivatives then. We didn't have the government destroying the free market by manipulating it. I mean, there's a whole host of things that you have to look at. I see if the market went from 10,500 to, say, 8,800 when it started, you would get some margin selling because some of those people do own gold and silver shares, and they might be sellers to make margin calls. But they're really not in the market, and what shows that is the prices. So I don't see any large selling at all in the shares of gold and silver. I don't think it's going to affect them that much.
This question actually came in last week. I'm not sure if we went over this. If you do remember the question, you can answer it or we'll go on. At what gold price do you think the COMEX will default?
Oh, that's a hard question. It all depends on how much delivery is taken of physical gold or silver. I don't think they have what they say they have, because they've had to have 2 injections of gold, one from the Canadian Mint. The Canadian Mint said they can't find the gold, it's missing. Well, they know where it is. They lent it to the COMEX, and they don't want to admit it. And the other one, the ECB, had to give them gold. And then 2-3 weeks ago now, the LBMA, the OTC market in London, couldn't make delivery, offered $1,300 an ounce for gold if they terminate their contract and not take delivery. They took delivery, and the delivery was made with melt coins by the Bank of England, and those coins, the coin melt had to have come from the U.S. Treasury. So, and another thing is that they are short 50,000 ounces in the OTC market in London. I don't know how they're going to cover it. So there's some big things happening. Big things. It's one of the reasons I explained this in Wednesday's issue. And the reason the CFTC has not acted on the market rigging, which they call concentration, against the commercials in the gold market, and the 2 banks, and the commercials are banks, and the 2 banks in the silver market, is that because of the derivatives and the borrowing of gold and silver by the U.S. government from GLD and SLV, plus they've been using derivatives and they're not supposed to. So the house is going to come down. I mean, I told you before when we were getting moves of $5 or $10 in gold one way or the other, I said it's going to go to from here to 2530.